when you go and get into investing, you need to have the right philosophy, the investment philosophy. You need to have a good process. Also, success in investing comes not necessarily from your IQ, but from your EQ. It's a behavior. It's how do you behave at the time of extremes. Do you get overexcited when everybody else is excited? Do you get scared when everybody else is scared? So maintaining a level head is incredibly difficult. And the way to get there is have a well-defined process.
Welcome to Super Entrepreneurs Podcast. I'm your host, Shahid Durrani. Today we have with us Vitaliy Katsenelson, who is the Chief Investment Officer at IMA. He is also an author of the Little Book of Sideways Markets and Active Value Investing. While his primary focus is on discovering undervalued companies for his clients, he's also known for his uncommon common sense. Welcome to our show, Vitaliy.
Happy to be here.
I'm glad to see all the wonderful work that you're doing. So what does your typical client look like? What are they in for when they come and see you?
So imagine like you have a usually professional, a doctor, lawyer, CPA, engineer, who either close to their retirement or maybe 10, 15 years from their retirement, somewhere during the retirement, who basically come to me and say, Vital, here's my life savings. This is what I'm going to live on when I retire. Please don't screw it up. We basically build a portfolio of stocks that should get our clients through any environment, any economy, and so they can sleep well at night. So my goal as an investor is to minimize volatility of my clients' blood pressure. So that's what we do.
Good. Does it include Bitcoin as well, or no, just stock?
No, it doesn't.
No.
When we own businesses that generate cash flows, and that I can value. But if I can value a business, Bitcoin or gold for that matter, they have no cash flows. And that therefore it's very difficult to value it. And since it's difficult to value, it's very difficult to figure out how much margin of safety I have. What's important in investing is to be rational, not when just things are going well, but when things don't. And there are, in the stock market, just a matter of time before things don't go your way. If you know what your business is worth, if you have a good idea because the business generates cash flows, then you can be rational. If you with Bitcoin, when it declines from 30,000 to 20,000, do you buy more or it going to 10? You don't know this, right? Because it's really value of asset that has no cash flows is what the next guy is willing to pay for it. And
I understand. So the businesses that you find, do you find them yourself, or are these publicly traded companies that you take part and invest in your clients' money in?
My language is slightly confusing. Let me explain what I mean. Because if you listen to me, you think I'm talking about private businesses.
Yeah.
But I'm not. But this is the attitude.
Okay.
So I buy public companies. Okay. But here's the thing, and this is why my language is confusing. When we analyze these businesses, we are looking at them as if we were buying the whole company.
Oh.
Okay. This is why my language is slightly confusing. I had to, Okay. So when we analyze a company, because our goal, just because it
doesn't matter.
It doesn't matter to us because we want to own it for a long period of time.
That's a cool strategy.
Yeah. But to me, this is very important. When stock market gives you instant liquidity, you can buy and sell companies 5 times a day if you want it. You won't do 1,000 times a day. So this instant liquidity is a feature and a bug. It's a feature because when you want to sell a company, you don't want to make an appointment to sell it like you sell a house, right? You want it to be able to sell it when you want it. But it's a bug because what it does, a lot of times it turns in people from investors into gamblers or traders. Okay, just because you see this a lot of times when people buy a company and they just know maybe a ticker or maybe slightly what the company does, but they have no idea what the company is worth. So that's not investing, that's trading or gambling.
Yeah. So, what are your thoughts on the current condition of the stock market? Are there any specific industries or companies that you think may be undervalued right now?
I think right now, if you look at the stock market, it's still very expensive. We had a dot-com 2.0 kind of blow up about a year ago, and those companies have declined a lot, but they're still not cheap because they were so overvalued. And if you look at the stock market today, and you normalize companies' earnings for profit margins that's very high, that's likely going to decline, then the stock market looks like it's probably one of the most expensive stock markets we've seen in the last ever or close to it. So this is a market where stock picking is going to matter again, where finding these gems in the rough is going to become very important. So that's how I see the
How do
stock
you
market.
do that?
Well, you analyze one company at a time. So this is like you look
So,
for
you have
great.
a team?
So the way we do this, I do have a team, yes, and I spend 7-8 hours a day doing research.
Oh,
So we've been doing it for a long time. So
yeah.
now I can look at company very quickly, assess if I'm interested to go further, if it's a quality business, if it's run by good management, if if it has competitive advantage, if the company is attractive. If in other words, because I don't want to buy companies that are fairly valued, I want to buy companies that are undervalued. And the reason you want to do
Hmm.
this, the reason you want to do this because it's a matter of time before things will go bad. And if you bought company cheap enough, then even if bad things happen to this business, you're probably going to be okay because you bought it with margin of safety.
So, how do you approach risk management when you're making a investment decision?
You do it on two levels. You do it on a portfolio level, and you do it on the individual stock level. On a
Hmm.
portfolio level, I want to make sure I have a portfolio of 20, 25 companies that even if I make a mistake on one or two, I'm still going to be okay. That's one way. On the company level, you just look for three things: high quality companies, with great balance sheets that are undervalued, run by great people. If you have a portfolio of these companies, then you'll be able to get through any economy or any stock market. Now, this is a key. The I'm a value investor, and for us, volatility of the stock price is not the risk because the market has an opinion on the market does not value your businesses every day. It prices them, right? So if I buy a company the stock price declines 30%, but the value hasn't, I'm fine with that. You have to be an investor, you have to have a long-term time horizon, and you have to look at volatility of the stock price as a feature, not a bug. Meaning that a lot of times when the stock price declines, it gives you an opportunity to buy more. Or when it goes up too much, it gives you opportunity to sell much sooner than you expected.
And Vitaly, do you take advantage of technology when it comes to keeping an eye on some of these companies like AI or any other kind of technology?
We are not early adopters yet, but we've been using GPT like technology to help us. So like when we to summarize long articles or summarize earnings calls transcripts, I can see how we using it more and more, but I'm not sure how yet. Okay, I'm sure we'll find new ways to integrate it. But in my industry, we use a lot of technology anyway because we subscribe to databases that have historical data for companies going back 30, 50 years, etc.
Mm.
Video screens, not for stocks, not just in the United States, but globally. It's not we it's to this point it was a database technology, but not AI. But I'm sure we'll be using more AI in the future.
So, do you have any kind of recommendations or advice for anyone that plays the stock market? Some strategies they can do to improve their investment?
Okay. So number one, the word play, don't. So if you're playing it,
As soon as I said it, I had a feeling you're going to say something.
so I have this recommendation, and I was working on the book that I never finished, but I have this chapter that gives you very good primer for what you should be doing as an investor. And you can get it absolutely free. It's if you go to sixcommandments.com, and this is where I basically spell out value investing principles. This is what Warren Buffett would be using when he invests. Okay, because I'm a value investor, just like Warren Buffett, and I go to Berkshire Hathaway annual meetings every year. And so if on sixcommandments.com, you can just download it. It's absolutely free, free chapter that goes through how for you not to play in the stock market, but how to invest.
Wow, it's exactly that. Right? How not to play, but to invest. So what is the minimum you look at when someone from the audience wanted to come and work with you? What's the minimum they should be having?
A minimum relationship is $500,000.
$500,000. Okay. To start with.
Yeah.
What got me the uncommon common sense, which you're known for in the financial circle. Can you share some examples of how you got that name and what that means or that title?
I think what happens is that a lot of times when people get excited, you have a lot of kind of crowd thinking. Okay. And a lot of times I'm just able to look at things with a kind of a very level head. And if you read my articles on investor.fm, you can see how last couple of years I was looking at all this tech bubble, all the tech companies that were trading at insane valuation, and a lot of them were terrific businesses. Let's look at Shopify or DocuSign or many other ones. Terrific businesses, but that's the first level thinking. It doesn't mean maybe those are good companies to work for, but it doesn't make him good stocks. Okay, this is a second level thinking. So identifying a good business, it's good, but for them to be good investment, they have to be undervalued. So that's a second level thinking. So by the way, I don't take this what you just mentioned, I don't take it too seriously. Uncommon common sense. I think when I look at my friends, I have a lot of investment friends. They have a very similar common sense. They've been doing it long enough to see when investor behavior becomes very irrational. And so the tricky part is that seeing that investor behavior is irrational is one thing, but not actually behaving like the crowd takes a lot of discipline and a lot of self-confidence.
Yeah. You could peg it as true leadership too when you look at things differently.
So I call it thoughtful arrogance. And thoughtful arrogance. Let me explain what I mean. Arrogance in the stock market in general or in life is dangerous because it forces you, it makes you think that just because you are, whatever decision you make is going to be the right decision. And sometimes you'll be right, but a lot of times you won't be. And when you make those decisions, you may blow up. Thoughtful arrogance is when you make a decision based on a lot of research. And by the way, investing itself is an arrogant. It's an arrogant activity. Why? Because when I'm buying the stock, somebody else is selling, or vice versa. Therefore, I'm basically saying I'm right and the person was wrong. Now, if I'm doing it, with the way we do this, we do it thoughtfully. We've been thoughtfully arrogant because we've done weeks and months of research on this company. We built financial models. We talked to the management. We read the company's financials. We talked to competitors. We've done a lot of research, and we arrived to the arrogance through research. When somebody buys a stock because they like the ticker and they think they deserve to make money because they are who they are, that's how people usually blow up. And by the way, and I can also see this with professional investors as well. If you look at Masayoshi Son's CEO of SoftBank, this is a person with incredible track record who has built one of the most valuable companies in Japan. But his success went to his head, and he made this incredibly horrible investments over the last 5 years. And he later confessed because he became arrogant. And this is, by the way, this is not me calling him arrogant. He called himself arrogant in the interview.
Yeah, if it gets to your head that way, you can make some seriously wrong decisions.
Yes, success is very tricky because success makes you believe that you can walk on water. Then if you had a string of success, you start thinking it goes to your head and you start feeling like you can walk on water, and therefore you have a Midas touch. And the market, stock market, is a very humbling. It humbles everybody.
Excellent. How important do you feel a mindset or the internal belief system is when someone gets into investing?
I think that when you get into investing, you need to have the right philosophy, the investment philosophy. You need to have a good process. Also, success in investing comes not necessarily from as much from your IQ, but from your EQ. It's a behavior. It's how do you behave at the time at the extremes. Do you get overexcited when everybody else is excited? You get scared.
Are you calm?
Scared. So maintaining a level head is incredibly difficult. And the way to get there is through have a well-defined process.
Good. Excellent share. Would you mind telling us what you feel your innermost superpower is that got you to this point in your life?
It's not what you expect to hear. My superpower is actually writing. Yes. And the reason for that, because if a viewer had a kind of a sneak preview into my head, you find it's like a Caesar salad. It's a complete mess. And what writing does for me, and I write 2 hours almost every day. There's exceptions, but rare exceptions. It helps me to organize my thoughts. And that became a superpower because I do focused thinking 2 hours a day, every single day. And
excellent.
And that's basically became a source of my superpower. Also, when you write, I find it's very meditative. It calms me down. It makes me a lot more rational.
I agree. Yes.
So
I agree.
Yes, I know this is not what you expect to hear, but that is the sort of.
No, it's good. It's good. It's connected though, right? Because you're enticing the mind when you bring your thoughts onto paper. That is a very incredible process. It's very sacred, I feel.
Yes, and I just, by the way, you didn't mention, but I just wrote in a book. It just came out about 6 months ago.
Okay, please share.
Soul in the Game: The Art of a Meaningful Life. And that book has nothing to do with investing, but not a single chapter about investing, in fact. However, I do talk about writing. I talk about many different topics in this book, but I spent a few chapters talking about creativity and writing. And where this is my superpower. Yeah.
Good. We'll keep an eye out for that. I appreciate you so much for taking the time to come on our show. And audience, appreciate you joining us for another episode. Vitaliy's information will be in the show notes. Take a look at what he's doing. Take his advice as an entrepreneur to park your money in investing. You want to work with someone like Vitaliy, very passionate about what he does. So appreciate you guys and appreciate you, Vitaliy.
It's my pleasure. Thank you.